Hello everyone. In this video I will talk about different type of asset classes in the financial market. Mainly speaking, there are four categorization of asset classes, which is equity, fixed income, commodity and foreign exchanges. Sorry for saying that there are mainly four. There are many category of asset classes, but these four are the topmost in terms of the volume, in terms of the number of peoples are being trading on these commodities, on these market, on these asset classes, right? Now let me talk about each asset classes in detail. Talking about equity. So equity is like owning the share of the company. Consider this plot, like this circle, as a total company's share. Now if I am buying equity, then it means that I am buying a part of the company. Consider this is one share. So if Reliance stock is traded at 2500 rupees, it means I am buying one share of Reliance at 2500 rupees, and the total number of share of that companies can be like is fixed. It can be changed depending upon the company's decision, but at a given point of time, let's suppose now at equals to 0, the number of share is fixed. So that one shares cost is 2500 rupees. So in equity we are buying the share of the companies, right? Now talking about fixed income. So fixed income are those type of security where we are like, as an investor we are paying an upfront amount, and the lenders, like we, pay the borrower, right? So this is debt security. So let's suppose that we pay P rupees at the beginning of the year, and that debtor, like that borrower, agreeing on the condition that they will pay me C1, C2, C3 each year, like starting from the next years, and at the end of the 10 years, or let's say at the end of the T years, they will like revert back all my P amount, right? So these kind of securities where we are paying the upfront amount, and in the future I am getting a coupon amount, and in the end of that, like after 10 or 15 years, that is called the time to maturity, they are paying me all money including my principal amount. So this kind of like cash flow setup is what fixed incomes give. So consider P is the principal amount, T is the time to maturity, and these are the coupon amounts. So you can easily calculate the yield from these from this setup by calculating the present value of all these future cash flow, and then doing net present value is equals to 0. You will calculate yield, right? And this is what yield in the debt market, like government securities or even in treasury, T-bills, etc., yield is being calculated. Talking about third, which is commodity. Commodity means any physical good like gold, silver, oil, wheat. In recent time, you might be hearing about the prices of gold and silver. It is being increased at a very rapid rate, and also the volatility is too high. So all like investing in those kinds of security is the commodity market. Now talk about foreign exchange. In foreign exchange, currency is being traded. So like USD INR, Euro USD, JPY INR. So all these pairs, so currency traded in pair. So like USD INR. So what does USD INR means? If USD INR is, let's suppose that if USD INR is 90. So what does it mean? It means that you need 90 INR to buy 1 USD, right? Similarly, if Euro USD is, let's suppose 1.2, it means you need $1.2 USD in order to buy 1 euro of a currency. Why this forex is important? I mean, in the previous video I talked about manufacturing company, import export. So all they need the rupee, like the currency, in different notation in order to buy and sell the security at two different countries, right? So these were the four different asset classes in the financial market. Thank you.